I can welcome back to the stage Melanie Noronha for the final panel discussion of the day, and that is entitled Strategic Partnerships, Rethinking the Banking Fintech Relationship. Mel, over to you.
So much, Rob. Appreciate that we're close to the end of the day, but we've got an exciting session with some heavy hitters right here for you. So what are we talking about in this final segment? Over the past decade, the relationship between banks and fintechs have evolved considerably from just a pure competitive threat at the start to perhaps a really substantial partner today. Now, there are various partnership models at play, but these are easier said than done. They face cultural, technical, and regulatory hurdles. And so to unpack partnerships and what really drives success in them, I'm pleased to welcome on stage Bogdan Dinu, Head of Product Innovation, CEMEA at Visa, Abdulmajeed Alsukhan, Co-founder and Chief Executive of Tamara, Sabrina Flunkert, Managing Director and Chief Executive at RatePay, and Shawn Chan, Chief Executive of Singapore Gulf Bank. Please give them a warm welcome. Thank you very much for joining me and for keeping our audience engaged at the very last session of the day. I want to jump right into it as well. And Abdulmajeed, I want to come to you. Can you give us an overview? Can you help set the scene on what the state of the bank-fintech relationship is today?
Well, first of all, assalamu alaikum jami'an, and thank you for having us here. It's a pleasure to be in Manama. I'm not sure, in Bahrain, maybe we're not in Manama, I'm not sure. This is a good question because to me, as someone who is a student of the craft, I did my readings before starting the business. And I think the partnership today goes back to the 1950s when banks start adopting technology as part of their accounting systems. And from there on, they've been a big customer and early adopter of technology. But something has changed maybe right on the 2000s and the internet, let's say, boom of the 90s, where technology companies start doing financial services. So the relationship was financial services using technologies of technology companies, and then technology companies evolving to become financial services as well, and hence the word fintech. And the biggest, I would say, fintech story of the 1990s was Capital One in America, which sparked and inspired many to start after, including PayPal and many others. In that era, financial services entities, specifically banks, thought this is a threat, and the partnership that they used to believe in became as well something that they start worrying about. And they, I think, had a reflection to make, which is, do you become just a buyer of technology, or you evolve to become a technology / financial services business, which I think it's now coming into life, where the newest fintechs, including Tamara, are both financial services and technology companies. And the older banks and the financial services entities are trying now, and I see some of them successfully doing so, adapting technology as a core part of their business. However, they, and us as well, we are an ecosystem. We both are, we need each other. We view the partnership as essential. And the partnership for companies, especially as companies who start as technology companies first, has to do a lot with licensing, has to do a lot with balance sheet management, and access. While banks also need newer ways to collect and gain access to deposits, also distribute loans in the digital era. So both of us at this stage complement each other in many ways, and at the same time compete here and there. But I think this is the nature of any market. We will partner up and we will compete. We, as Tamara, have successfully built a large business in the last 5 years with partners in the financial sector, local and global, either for infrastructure. We need the infrastructure access. We are in the pay-in, pay-out business. We use banks as our partners. But also, we borrowed money in an innovative way. We did the first asset-backed facility in the region in 2023. And fast forward today, we recently announced a $2.4 billion asset-backed facility led by Goldman Sachs, Citi, and Apollo, which are banks / financial services who thought of Tamara as a partner to grow with. So I think it's a combination of building and partnering between banks and fintechs.
Absolutely, and I think that's been a common theme today, the blurring of lines between these labels. Who's the fintech, who's a traditional financial institution now. But Bogdan, I want to come to you to build on this. Why partnerships are so important. What's the value that they can deliver, particularly at a time when customer expectations are evolving, technology is disrupting from, embedded finance to stable coins. Why are these partnerships so valuable?
All right, so let me respond straightforward. It's creating customer value, right? So if you think about the end consumer, people like you and me, we benefit by that, right? Today we have way more choices than 5 years ago, than 10 years ago, if you think about financial services. So everything it's about creating customer value. And if you think, just to pick up one example of from Visa World, about 2 weeks ago, we announced that we launched, particularly in Visa Direct, a way for our customers to be able to fund us in stablecoin. Right? What does it mean? It means that they can fund us 24/7, and it means that people using Visa Direct, and again, people like you and me sending money back home, we can send money in real time to any payment method, to any payment instrument. So I would really summarize it like that, creating real customer value and sustainable customer value as well.
Absolutely, and I want to return to that theme as well. But Shawn, I want to go to you as we think about partnerships. How should banks decide when to partner or when to acquire a certain technology or when to build that capacity in-house? Well, how are you thinking about it?
So, hello? Yep. So I think there's no simple answer, but I think maybe a good guide would this be something that is core to their business? So for example, as SGB, for us, our mission is to bridge the traditional finance and digital finance, right? More specifically, we want to integrate what they call digital assets and crypto with traditional finance. Now, this requires a different infrastructure. For example, we would require for a custody solution to be able to hold crypto, stable coins, we would need a different infrastructure. Now, for something like that, could we have built it ourselves? I suppose, yes. But is that the best thing for us to do? No, right? This is akin of us, using Microsoft, using Google, right? So something like that, it's not so core, but it's complementary to our main business. For what are we building, for example, just to put a real application to this, right? If it's something that's not in the market today, right? That's obviously something you have to build, or we could get someone else to build, but it doesn't make sense, right? It makes sense for us to build it, especially if it's going to be our core offering. Case in point, we are actually building up what I will call a stablecoin clearing center, right? Where we'll see, in our view, there would be a plethora of stablecoin issuers. Now, for any merchants or any corporate who's thinking of using it for treasury, they don't want to have to deal with so many, right? So how are we going to do this, right? There's nothing like that in the market, right? We would have to build the orchestration layer ourselves. The way we manage it It was all proprietary. So for something like that that's key and cornerstone in our strategy, that's definitely something that we'll build on our own.
Yeah, wonderful. I think especially now in this new financial services ecosystem where everyone has a different role to play, everyone can contribute in a different way. I think these partnerships are going to become more important. Sabrina, I want to ask you a little bit about partnership models. And Abdulmajeed, I'm going to come to you as well. Both of you are BNPL, but you'll have different models. RatePay is white label and yours is not. Do the merits of one outweigh the other, Sabrina?
It's a good question where you see yourself in the value chain. So as you said, RatePay is a white label champion in Central Europe for buy now, pay later, and partnering with banks is actually quite new to us. You mentioned you launched the first ABS facility in 23 here in the region. We just did it this year, which was a huge milestone for us, and a lot of key learnings about what it means to partner with banks on the product side, which we did with BNP, for example, in the market, but also on the ABS financing side. And is there a merit to each of that? I think being a white label helps banks actually to really acquire to a fair price the infrastructure and the capabilities that fintechs bring to the table. And I think we're going to talk about pitfalls a little bit later in the discussion, but I think working as a white label provider is beneficial if you want to actually be quick on the banking side to roll something out. On the other hand, it also means that the white label provider needs to 100% apply to your branding from a bank's perspective. So it's a lot of responsibility waiting on you as a white label provider. I was asked recently from someone saying, oh, you're white label, so user experience doesn't play a role. And I said, well, wait a minute, it's exactly the opposite. User experience is so core because we have the responsibility from a white label perspective to adhere to the brand standards and to the perception and the values that the banks are representing in the market. So I would say white label has a lot of advantages if you want to position your own brand from a bank's perspective, but you need to be sure to partner up with the right partner to really...
Yeah, all really valid points, Sabrina. Yeah. Abdulmajeed, your perspective on partnership models?
Well, look, when I first started Tamara, I remember I met investors who told me, why build a balance sheet? Just go to the banks, they have the money, and you just lend it. Unfortunately, banking is not as easy as it sounds. Banking is a heavily regulated business with risk management who are independent of the executives, who may and may not agree with anything you do. So to build a business from scratch as a startup, especially when you're disrupting, when you're doing something new, it sounds good to do partnership, but in reality, it's really hard. It's really hard to work. And I don't think it works in any specific case, or in every case, but it works in specific cases. So if you are in the business of lending, and the banks will not trust you easily as a new business to do the underwriting and be responsible and deliver the best experience you're looking for. And sometimes this will slow you down big time and until everything is already gone and done. So maybe other industries are the opposite. So if you're in the payment business, for instance, it's less risky. It's more partnership. The banks are happy to outsource gateway technologies or X or Y or Z, or maybe compliance technology. So it depends on the type of technology you're building, and some works fantastically with partnership, some don't. For us, we believed building our own balance sheet while figuring out the best structure that allows banks to be exposed to us in a ring-fenced basically structure, which is ABS, which unfortunately the regional banks earlier on did not get the idea of. We brought the global banks first to support us, and now we see more regional banks being more excited about partnering up with Tamara, but not as in the lender to the consumer directly,
right,
but in an asset-backed structure. They meet their objectives, which is building a yielding business. We maintain the customer experience in a way where both parties, all parties, including the customers, are winning in such a structure.
So more flexibility.
Yeah, you need to figure out the best structure for your business. Not everyone is the same.
Yeah, certainly. And again, thank you for opening the door. I think that the discussion we want to have on the challenges, and Bogdan, I'll come to you with that question about the lessons that can be drawn from partnerships Visa's engaged in, whether they've been successful partnerships or failed partnerships. What are some of the key lessons?
All right, so I think I will summarize it like this, because Visa is a network of networks, right? And given our strategy, we are successful as long as our partners are successful. So we try to create that framework for everyone to grow in the ecosystem, because this is the way we grow as well. So again, and maybe I'm coming back to my previous statement as well. The most important thing when we go in a partnership is to be sure that we create customer value. And this is really the key foundational thing of being successful. And the second thing is mutual trust, right? And I believe this is how Visa operates with, the whole banking ecosystem and fintech ecosystem for the past many decades. But it's the mutual trust, creating that customer value, and being sure that both of us in a partnership, we commit to the same. And the flip of your question, it's exactly the other way around, right? Like, if there is no clear reason why we are this in partnership, why we are doing this, what kind of customer value do we create, is really for the sake of, I don't know, doing a PR, or it's a true customer value and consumer value particularly. And if the response is no, then this is usually a failed partnership.
Sure. How have you gone about building that customer trust? You said that trust element is so important.
Yeah, I think coming back to banks and fintechs, in general, banks have that. It's a given, right? If you have a banking license and if you are Visa of the world, that trust component is already there. So most of the fintech will like to build that by associating themselves with Visa and banks.
Yeah,
I will summarize it like that.
Yeah, that makes a lot of sense. Sabrina, what's your take on this? Your lessons learned from your experiences?
Well, I would say, first of all, get to know each other well in terms of understanding what the other partner needs and what the other partner can provide. And very concretely, I come from a very heavily regulated environment. So what I'm hearing here in Bahrain is heaven for me, being German, BaFin regulated with the institution I run. And what you need to know is that it's of course very different levels of regulation. Also in Germany, you have fintechs, which are less regulated, not regulated, heavily regulated. And then you have the banks, which are obviously regulated under banking regulation. And I think banks need to be very certain and aware of what fintech regulation means, because the first fintech banking relationship we entered a couple of years ago, we realized that we agreed to a couple of reporting obligations, which seemed to be totally normal from a banking perspective. And we just signed the contract and said, okay, no problem at all. And then in the aftermath, we found out that there was a hell of stuff which we could not deliver, which was a problem, obviously. So we grew as we grew into the partnership. But the pitfall was really to understand from the beginning, what does it mean and what do the banks require? And that starts with reporting obligations on data, also coming back on the ABS structure that you also mentioned, which we are now running. So which data is needed and which frequency and which quality? Because I guess fintechs, the big advantage of fintechs is that you're much more agile. Sometimes you are quicker, you're just starting and get it done, and then you fix it afterwards. Where banks, I think, from my experience, are the other way around. They sort of like want to have it done first and before they start running it. So we often build while we already run, and it needs to be the way around. I think that's one lesson learned. Really be sure that you understand each other's needs. The second lesson learned, which we also painfully experienced, was that when we entered for the first time into a partnership to build a joint product, we trusted the bank and say, okay, if they believe there is a need for it, we are happy to build it for them and to supply it. And we put a lot of resources on it. But a very important question we failed to ask in the beginning was, what is the user and consumer experience at the end of the day? And I think it revealed throughout the project that we would have better jointly set on a table, not only defining what each party would deliver, but turn it around and look at it from a customer perspective. So what is a product the customer will feel, and what does it need to look like in order to be really usable and be a nice user experience? Because you can build as much as you want, and you can partner up as long and as much as you want. If you don't deliver value for the customer at the end of the day, it's a failed product. So I think it's really these two things I would point out. Which are
excellent insight. And I think you echoed what Bogdan said about defining customer value, because your perception of that might be different.
Exactly.
Shawn, what are your thoughts on this? But also maybe more specifically about who should own the customer relationship in these kinds of partnerships, and how do you avoid those conflicts of interest?
Again, there's no one size fits all, right? It depends on what is the nature of the banking and the fintech partnership. And I think it's already said many times today, who is the bank, who is the fintech? For us, for example, we are a new bank, a startup bank. We see ourselves as a fintech, right? So today, again, case in point, SGB is a wholesale bank, right? So most of our clients are actually corporates. So the way we work with them is sometimes it's a B2B business, often it's also B2C business, right? So we don't in that sense own the C, right, or own the B, but I could imagine in a case where it depends on the partnership. So for example, if it's embedded finance, right, who is the one that has the data? For example, if you want to start to give loans and all that, the bank doesn't have the data, right? Who can do the best underwriting? Who can build the best credit risk score? I mean, certainly the fintech's not, if they're using their own balance sheet, they're just using the license to kind of enable this, then it would be them, right? It's not possible for the bank to overstep, to say, hey, right? In some sense, perhaps the bank doesn't want to do so as well, right? Because, for example, if one of our corporate partners, right, is really a huge consumer facing entity. Now, am I going to take on the burden of KYCing and onboarding all of them? No, perhaps, right? So I think this is where the bank and fintech partnership can be really beautiful, because maybe not so much in our example, but in more like a traditional bank perspective, fintech often is a perfect distribution platform that they don't have, right? So in that sense, why would you want to cannibalize and go beyond? It's beyond your capabilities anyway. To the point about delivering value, having the best customer experience, is the bank in the best position to do so, or is the fintech or that e-commerce platform, whatever it is, are they in a better position to know? For example, say Amazon, if tomorrow they're going to switch on full force, like a financial services, should the bank be the one doing, or should it be Amazon? I mean, I think the answer is pretty clear.
Yeah, Sabrina, you want to comment on that?
I think it would say it also depends, right? I get your answer depending on the environment you act in. But let me pick up on the example of Amazon and banking potentially, or payment providers, because from my perspective, it depends on who can create value at the end of the day. It's a lot about customer experience, but at the end of the day, you also talk about profit. Sorry just to say, but it's also at the end of the day, who can make a profit? How is the value created, shared among the different parties at the table? And we often face a problem as RatePay. We hold a payment license, so we can't do certain things. So we cannot, at the end of the day, provide additional services to the consumer, like, for example, credit cards that banks could do, or offer an account. And that sometimes is not good from a pricing economic standpoint of view. So I see the benefits also coming back to, let's say, Amazon as a retailer and picking the payment provider, if you would both own the customer, because at the end of the day, it could become a very good pricing tool to also, at the end of the day, reduce the customer acquisition costs by being able to offer additional services at the end, which the fintech might not be able to do, but the bank is able to do. So I would more look at it from a, yes, consumer experience perspective, but I would also attempt to look at it from a who can create most value and recover the customer acquisition costs at the end of the day based on the amount of services you're allowed to offer.
Yeah, so some deep conversations at the start about defining all of these areas. Abdulmajeed, I'd love your thoughts on some of this, but how do you build this into a governance framework now, right? How do you enable or safeguard some of these components, but also not end up drowning in bureaucracy, right? How do you strike that balance with the right governance model?
I'm afraid I don't have the answer, but I'll try to give an example of where it's failing. We know.
That's a start.
Yeah, because we have a big example. One of the most customer-centric technology companies of the world is Apple. And one of the biggest banks in the world is Goldman Sachs. And they've launched a partnership that is failing miserably. That is adding one value to one side, which is the customer-centric side of the equation, which is Apple, and has a distribution. But Goldman Sachs is struggling to meet the standards of this consumer-facing technology company, because all they care about and their North Star is the customer. While banks as well need to make sure that every customer is also, to a degree, not dragging their business in a wrong direction, and therefore you might reject some customers, which is not optimal from an experience perspective. So even large companies, when they came together, they have actually struggled to figure out the best way to meet in the middle where everyone is winning. That's why I'm saying that especially in consumer-facing financial services, it's a tough one. It's a tough one to have a partner that is one bank, and then there's another one that is a technology company, and they will meet in the middle. They will always have this kind of this side have a different, understanding of how to deliver the best customer experience, while a consumer-first technology company has a completely different playbook.
Right.
So, in my opinion, it's the partnership much more thrive when it's not customer-facing. When the customer-facing entity is the regulated entity, that then allows the technology business to focus on building technology rather than customer experience, which, if you want to be in customer experience, which Tamara is, we then thought that we should go and get our own license, because otherwise I will not meet the standards that I want by going to the banks, because the banks would have rejected most of my customers.
Right.
When we started Tamara, everyone I met told me, how would people pay you back? Why would they pay you back? And I was like, because we do underwriting and there is a way to do it. Nobody believed me. None of the banks. They would have rejected almost all of my transactions. So who do I blame them? No, I would not, because they are heavily regulated and they are established and they have their own rules. I decided that the best way, if I want to build a consumer-facing business, is to build that on our own. So while others in payments, not in lending, have found a perfect match with banks and partnership. EMI companies have done a great job partnering with banks. So I think the consumer-facing fintechs need to have their own licenses. That's the best governance way.
Fair. I mean, that's a fair point. But I wonder if it's about building that agility within the governance framework. You have dispute mechanism, dispute resolution mechanisms, and you have constant check-ins where you're talking about customer value. Are you delivering? I wonder if it's that sort of ongoing touch points that will allow you to have the flexibility. But I don't know if anybody else wants to comment on that.
Let me I think touch points and talking to each other in a partnership is key, right? I think we spoke about transparency before, and also if you run these partnership models between fintechs and banks, governance also means who do you put on the team, and an understanding for each other that a bank, from a governance perspective, might have a full team from different departments, from different controlling functions running a project, while in a fintech, you might not have 10,000 people being employed by a bank. You might have 100 people or 200 or 300 people who are running the whole show. So I think also there needs to be a certain understanding among the parties how governance is run within the company. Now, the regulatory framework might already give some sort of guardrails, what you can do, what you cannot do, how you think about risk on the banking side, on the fintech side, but that assumes both institutions are regulated, right? So again, it comes back to mutual understanding and close alignment. I agree with you, Melanie.
Yeah, fair enough. Bogdan, I know you wanted to add something, so I'm happy for you to do that, but also could you then comment more specifically on how data can be shared responsibly between these partners?
Sure. So what I wanted to add, like when I think about governance and your question earlier, I think about Visa, and usually fintechs are saying, oh, it takes forever to work with Visa to get the approval and the licensing and so on. And many years ago, Visa created this so-called Fintech Fast Track program, and it's super agile, but there is a receipt, a very clear receipt, like based on what Sabrina was saying earlier. You come, you need to do that and that and that, and then you can issue cards literally 1 month later, digital cards, physical cards, you name it globally. So we were able to invent that receipt, and that receipt is actually being sure that the governance rules are being covered. To respond to your second question about data, yeah, very, very interesting topic, because sooner or later we usually go through data phishing, data leakage, and so on. And almost every other week I get an email that X company, lost your data, you need to change your password and stuff like that. I think in Visa we see that totally different. Like, we know that data and security is critical for our customers. And meanwhile, we know that data privacy shouldn't kill innovation. Right? So the promise and the core promise of Visa for our customers, yes, it takes longer to come on board, but then once you are on board, you as, Tamara, you are being sure that nobody else sees that data, no one touched that data, and it's total privacy and only belongs to you as a customer. So that's, again, the core promise, and it takes time and it takes a lot of investment to deliver on that. And it's, under the radar, nobody sees that, but in the real, nowadays, the cybersecurity, it's, one of the hottest topic. And another example that we do in Visa, for example, on data security, to give you a real-world example, it's Visa tokenization service. So now we are able to tokenize the card number in a unique token. Nobody can see that as well. It's behind the scenes. And you can enable any kind of, recurring transaction, any kind of e-com transaction. So again, only behind the scenes, nobody understands, nobody can see any card data. And that's something that is just an example of what Visa does in that space.
Yeah, of course. Again, I think lots of processes and systems related to data and other governance elements, but there's also an intangible component in partnerships, the cultural challenge. And Sabrina, I'd love it if you could comment on that. So how do you deal with that in partnerships?
Again, I would say talk and get familiar with each other, because you're fully right? I think every company has a unique culture. And if you talk about classical banks and corporate banks, I myself come originally from a banking environment, and you see a lot of fintechs, it has a different culture to it. I think banks are also slowly evolving and adapting more of a fail to succeed culture, but it takes time, because it's a question of regulation, it's a question of risk appetite, and how teams are run, how big are teams, how is the governance structured. And in a fintech, a culture, you often have, like, for example, we build MVPs, then we test, we iterate, we continue to build. And I'm sure with Tamara, it's probably very similar, that you go out with something which might not be 100% complete, but then you iterate as you go and you test and you try. And in the banking relationships that we had, we very often realized that they wanted to have every use case, every edge case tested before we launched. And I think that's also a cultural way how you approach things. If you're willing to fail and learn, or if you want to have a perfect solution and then you go out with it. It has a lot to do with reputation, obviously, and also, as I said, with risk appetite. But it's important to align on these matters before. And on the other hand, there is only so much you can align on. If you would clarify all of that before you enter into a partnership, I think the partnership might never happen. So I think you need to be open-minded and really, as you go, adapt and get to use each other and choose your partners wisely. I think that is my key advice, to say, choose a partner wisely, because you only have so much capacity and you need to bet on the right partnerships.
Yeah, wonderful. Yeah,
Maybe
sure.
I could chip in on this a bit. I think sometimes, or in fact, oftentimes people see the bank as the necessary evil, right? Fintechs have to partner with them because of they have certain regulatory permissions that they don't have, and they need the bank to do so. And sometimes, the bank will come in, you need me more than I need you, right? So, and because I have these regulatory obligations, we just throw the rule book at you. You just have to comply. And I think that makes it very difficult to partner well together. So to your point, finding the right banking partner is important. So like for us, we again, we kind of blur the lines as well. We are still a bank, a very wholesale model. We partner with a lot of payment companies, what we consider fintechs, a lot of crypto exchanges or VASP, who are also another form of fintech, right? But the way we think about it is we also try to be kind of linked to the earlier question of who is the customer, right? Who owns the customer? But in some sense, I think one of you mentioned it's actually co-owned, and I think I like that a lot, because that also kind of expresses the way we approach it. So for example, when we work with payment companies, sometimes they're new, right? They don't see the issues ahead. And for us, that's native to us. So we try to educate a lot and to tell them the reason. We take a lot of time to explain to our partners, right? Why we have to do this. And in fact, they will request, okay, we don't have the capability to do, let's say, this validation check, right? Before the certain payments go out, can you do it for us? 9 out of 10 times, as we understand, the banks will say, no, that is for you to build. This is what we have. You match us, right? But for us, we try to go out of the way to as far as we can to say, okay, we can help in this way. If we can tweak our payment systems this way, we can apply this certain validation checks, we'll do so, right? So we try to help them think what's the best way for them to deliver superior UX UI. Because again, we see them as a distribution channel. We are not able to reach that customer, right? They have the market penetration, they have the ecosystem. So if we can help them achieve that, we think it's a win. They will stick with us rather than, another bank who says, this is the way we do things for the last 20 years, take it or leave it.
Yeah. Just want to pick up on one point you said, because I think it's super crucial. It's this eye level, same relationship in a partnership, even no matter how big, no matter how small, because fintechs by definition, very often they are smaller than the banks when they start entering into partnerships. Not in all cases, but in a lot of cases. And having that eye level relationship and ensuring that this is the case on both sides, I think that's key to really make it.
Absolutely. So deep conversations, lots of education. Hopefully when we speak again next, Abdulmajeed, we're a bit more optimistic about these partnerships. But thank you all for your wonderful insights. It's been valuable. I think it's important to get different perspectives and the real examples of the challenges all of you have faced, because hopefully everyone in the audience learns from it and can maybe have a more successful partnership going forward. So thank you, everybody. Thank you for staying with us for this session. Please join me in thanking our panelists.